In a world where markets rise and fall like unpredictable tides, the promise of calm waters is irresistible. A modest, unwavering return, 8%, 10%, 12%, year after year, regardless of recessions or global crises. To most, it looks like discipline. In reality, it's the first and most subtle layer of the trap. Scammers know that volatility breeds doubt, but stability breeds trust. Smart investors, seasoned, analytical, cautious, are drawn to portfolios that never seem to take a hit. After all, they've weathered storms before, and here's an investment that seems immune to them. But the very thing that makes it appealing is the thing that should scream impossible. Bernie Madoff perfected this art. His investors didn't see wild gains. They saw a comforting flat line of consistent profit. And when that line never wavered, they didn't question it. They celebrated it. Yet behind the curtain, there were no miracle trades, only an elaborate recycling of new investor money to pay the old. You might think you'd spot such a fraud, but certainty is a drug, and once you've tasted it, you'll ignore the storm clouds until the water rises over your head. Because in finance, the most dangerous promise isn't high reward. It's a reward that never falters. Imagine shaking hands with a man whose reputation gleams brighter than the skyline behind him. He's been featured in financial magazines, spoken at prestigious conferences, and sits on the boards of charities. He's respected not just for his money, but for his character. In your mind, a man so admired couldn't possibly be a criminal. This is the halo effect, the mental shortcut that tells us if someone is exceptional in one area, they must be trustworthy in all others. Smart investors aren't immune to it. In fact, their pride in recognizing greatness can make them even more vulnerable. Ponzi architects weaponize this bias. They cultivate spotless public images, surround themselves with credible allies, and participate in high-profile philanthropy. They know reputation works like armor. It deflects suspicion. Victims of these schemes often admit later that they never asked for proof, never demanded to see trades or holdings. Why would they? The man was too important to lie. And that is the perfect cover. Because the higher someone stands in your esteem, the further they can push you before you notice you're falling. It doesn't start with a billboard or a cold call. It starts with a whisper, a discreet tip from a trusted friend, an invitation to a private opportunity few will ever see. No advertisements, no public pitch. Just the intoxicating knowledge that you are special enough to be included. This is how the smartest investors walk willingly into the dumbest traps. Exclusivity plays on status, ego, and the primal desire to be part of something rare. The fewer the seats, the harder it is to resist claiming one. Scammers perfect this theater. They might limit buy-ins to specific dates, refuse small investors, or even turn people away to amplify demand. You feel chosen until you realize the only thing you were selected for was to be the next deposit in their payout chain. In these schemes, secrecy isn't a red flag, it's the bait. And the more intelligent and accomplished you are, the more you want to believe you've earned a place at that table. Because the cruelest trick isn't locking you out of the room, it's convincing you that getting in was the prize. The man sitting across from you isn't a stranger in a suit. He's a neighbor, a fellow club member, a friend of a friend who's attended your daughter's wedding. You've shared meals, exchanged holiday cards, maybe even vacationed together. This isn't some faceless broker calling from a skyscraper. It's someone embedded in your life. This is the engine behind affinity fraud, one of the most effective delivery systems for Ponzi schemes. The scammer doesn't just sell you an investment, they sell you themselves as part of your community. Every social tie becomes a testimonial, every mutual acquaintance a silent endorsement. Smart investors often let their guard down here because due diligence feels insulting. Why ask for proof when you've known the man for years? Why question a deal when it's endorsed by people you've trusted your entire life? The betrayal cuts deeper because it's personal. When the scheme collapses, the loss isn't just financial, it's the shattering of a network, the poisoning of long-standing relationships. Because the sharper the knife, the cleaner the cut. And nothing is sharper than trust. The presentation is dazzling: charts, algorithms, proprietary trading strategies. The vocabulary is dense, peppered with financial jargon so sophisticated it feels like a foreign language. You don't understand every detail, but you assume that's why it works. After all, if it were simple, everyone would be doing it. This is the mirage of complexity, a tactic designed to make you feel that questioning the mechanics would only reveal your ignorance. Smart investors are especially vulnerable here. They're used to navigating complex systems, so they accept difficulty as a sign of legitimacy. Ponzi operators know this. They hide the emptiness of their operation behind elaborate models, obscure data points, and technology that sounds revolutionary but is never actually explained. The more incomprehensible it is, the safer it feels. Because if you can't fully understand it, neither can potential competitors. By the time the veil lifts, you realize there was no hidden genius, no revolutionary system, just smoke, mirrors, and your own unwillingness to admit you didn't understand what you bought. Because in finance, the most dangerous secrets are the ones you're too embarrassed to question. You're told you can withdraw anytime. You can choose the risk profile. You can watch your account balance grow in real time. On paper, you're in charge, free to pull your money the moment you sense trouble. But that's the trick. The illusion of control keeps you from acting until it's too late. Scammers know that as long as you believe you can exit, you won't. You'll ride out small doubts, waiting for a reason to leave that never comes. And if you do request a withdrawal, they'll honor it, at least at first. That's how they keep you believing. Madoff used this to perfection. Investors could, and did, withdraw profits. Those withdrawals, funded by new victims, became proof the system worked. No one realized they were just taking bites from a poisoned apple. When the end comes, the exit door slams shut without warning. And all that control you thought you had? It was just another layer of the trap. Because in the mind of a con artist, the best prison is the one where the prisoners think they hold the keys. A stack of official-looking statements, a secure online dashboard that updates monthly, maybe even a glossy annual report printed on heavy paper. Every page is a mirror reflecting exactly what you want to see: steady gains, well-placed investments, and a future that looks brighter each year. This is tangible proof, or at least it feels that way. Smart investors often take comfort in paperwork because it transforms abstract trust into something physical. If you can hold it, surely it must be real. But the beauty of a Ponzi scheme is that creating fake proof is the easiest part. Numbers are cheap to print. Screenshots are effortless to forge. And when those statements look professional, complete with branding, charts, and legal fine print, they become harder to question. Victims often admit they did look at the numbers. They just didn't verify them. After all, why waste time confirming what's already printed in black and white? In the end, those documents weren't evidence of wealth. They were theater props in the longest-running show of your financial life. Because the best lies don't erase reality. They replace it with something that feels even more convincing: a market crash, a recession, a geopolitical shock that rattles investors worldwide. While fear grips the public, one voice rises above the noise. Calm and confident, offering a safe harbor from the storm. This is when the smartest investors are at their most vulnerable, not in times of greed, but in times of fear. The crisis opportunity trap works by positioning the scam as the antidote to chaos. Returns may not be astronomical, but they're stable, miraculously untouched by whatever catastrophe is dominating the headlines. When every other investment is bleeding, this one blooms. It feels like you've found a hidden shelter, but what you've really found is a perfect camouflage for fraud. Scammers thrive in crises because fear dulls skepticism. You're not chasing riches, you're protecting what's left. That urgency makes you move fast, bypassing due diligence. And when the crisis ends, so does the illusion. The storm passes, but the harbor you ran to is already sinking beneath the waves. Because the most dangerous scam isn't the one that promises to make you rich, it's the one that promises to keep you safe. In the beginning, you're cautious. You start with a small amount, test the waters, and watch the returns roll in. Months go by. The numbers never falter. You begin adding more, doubling down because the system has earned your trust. This is the loyalty trap. Smart investors often pride themselves on identifying winners and sticking with them long term. In legitimate investing, that's wisdom. In a Ponzi scheme, it's a death sentence. The scammer rewards early trust with flawless performance, knowing you'll escalate your commitment. Small withdrawals are honored quickly to reinforce the bond. And as your confidence swells, so does your exposure. By the time suspicion creeps in, your fortune is concentrated in a single place, easy for them to take in one clean sweep. Victims rarely lose because they invested once. They lose because they invested again. Because in the end, loyalty isn't a virtue in the world of fraud. It's the lever that lifts your entire fortune into the con artist's hands. It's the most dangerous trap of them all, the quiet conviction that scams happen to other people, not you. You're too informed, too experienced, too cautious to be taken in. That belief becomes armor, and that armor is exactly where the first crack appears. Smart investors sometimes overestimate their ability to spot deception. They assume con artists are sloppy, desperate, or obvious. They expect Nigerian prince emails, not well-dressed men shaking their hand at charity galas. They expect empty promises, not years of flawless performance backed by impeccable paperwork. Scammers exploit this pride. They don't just sell you an investment, they sell you the idea that only someone as discerning as you would even be invited. It's not just your money they target, it's your ego. And the smarter you think you are, the less likely you are to ask the questions that could save you. When the truth comes out, the shock isn't just financial, it's personal. You weren't simply robbed. You were outplayed in a game you thought you couldn't lose. Because the most valuable thing a con artist can steal from you is the belief that you were immune to them all along. That's all for today. I'll be making similar videos in the future. Subscribe to see them.